Aotearoa, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. The US and the world are facing a new jolt of inflation as the hot war activity spreads. The US central bank response? Ignore the risks and pretend things will return to normal soon. But first, US mortgage applications fell sharply last week, their largest dip since mid-May, and driven by a 10% fall in refinance activity. And that came as their benchmark mortgage interest rate rose yet again, now its highest in a year. Also falling sharply last week were US crude oil stocks, down much more than expected. They have fallen in 12 of the past 14 weeks, and this latest one is one of the larger retreats. Worse perhaps, their strategic oil reserves are now at levels they last had in 1983, just after they started building these reserves in 1982, and their economy is now 9 times as large. These strategic reserves have gone from double the private system holdings to only 75% of them, so it is public mismanagement on an epic scale. The US Fed held its policy rate unchanged, even while noting they have high inflation that isn't easing, and they have supply shocks that have driven price increases well above their 2% goal. But it was a split decision, with 3 members voting to hike by 25 basis points. But one of those was not Jerome Powell. He was in the 9 who voted for the hold. Chairman Warsh's style is all over this statement because it is very short with little transparency. And Warsh's inflation-fighting vow seems to be just talk. Across the Pacific, Singapore reported that their producer prices rose more than 30% in June from a year ago, maintaining the pace of increase for non-oil goods they've had since March. In South Korea, there's been real drama on their stock exchange, with declines so sharp they had to temporarily suspend trading. It is all related to perceptions about tech valuations. Even though these companies are reporting sharp profit increases, investors worry that Chinese chipmakers are about to eat their lunch. At one point yesterday, the share market there was down 13%, suddenly wiping out all the prior AI gain euphoria. But it ended down only 6 basis points to cap a 5-day retreat of down 17%. In Australia, June CPI inflation came in at 3.8% and less than the 4% expected. Was kept up by the expiry of household energy support measures, but the falls in fuel costs more than offset that. Will this deter the RBA from moving their policy rate on August 11th? It may do, but inflation expectations remain very high. Some analysts now expect a hawkish hold. The lower CPI hit the AU dollar hard yesterday, presumably because foreign exchange markets no longer see higher interest rates imminently. And the global credit risk environment has evolved heading into the second half of 2026, but continues to be driven by 2 main sources of short-term risk, according to Fitch Ratings: rising vulnerability to AI-related market corrections and persistent geopolitical uncertainty in the Middle East. And this is on top of a broader context of slowing US consumer momentum, high inflation risks stemming from the second quarter energy shock, and structural public finance pressures limiting the ability to respond to risk events. Credit risk premiums will rise, says Fitch. Iran was annoyed Trump claimed talks were taking place when they weren't, so they reinforced their point. Then the US and Saudi Arabia attacked Iran-linked forces in Iraq, and the Houthis attacked 2 Saudi tankers off Yemen. This mess isn't going away. Air cargo demand rose in June at a time of a relative lull in Middle East tensions. It was up 8.5% overall, up 9.6% for international trade. Asia-Pacific activity was up 9.5% from a year ago. And there were larger increases in air cargo trade with North America. Meanwhile, the China to Europe cargo train trade is surging, added to by very fast 15-day transit times for peak demand of air conditioning units, for example. Shipping via the Suez Canal choke point will probably never recover for consumer goods. The US Treasury 10-year yield is now just on 4.65%, up 5 basis points from this time yesterday, with a small push higher after the Fed decision. And the price of gold has risen to $4,075 an ounce, back up $45 from yesterday. Silver is now just over $58.50 an ounce, back up $1.50 from yesterday. And oil prices have risen sharply by $5.50 at just over $84.50 a barrel now in the US, while the international Brent price is now just under $90.50 a barrel, up $5. The Kiwi dollar is down 10 basis points from yesterday at just on 57.8 US cents. Against the Aussie, we're up 30 basis points, though, at 83.3 Australian cents. Against the euro, we've dipped 10 basis points at 50.7 euro cents. That all means our trade-weighted index starts today at 61.7, which is down 10 basis points from yesterday. And the Bitcoin price starts today at $63,890 and up 0.5% from yesterday. Volatility over the past 24 hours has been low, just on plus or minus 0.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora. I'm David Chaston, and we'll do this again tomorrow.